Hey guys, this is Bruce Marshall from Simpler Trading with tonight's video update, and today is Friday, June the 8th. So what I've got on the screen here is today, the S&P for today, and we had been coming into this week thinking, or coming into the end of this week thinking that we might actually sell off a little bit, but instead, this is the open here. Friday morning, we had a slight, I wouldn't even call this a gap, but a slight little drop, and then we kind of chopped, and we got kind of picked up some pace here late morning, and kind of continued it into the close, and a strong close there. So not really what I was expecting. It's good. I mean, I'll take it up, all day long, with the indexes going up into the close on Friday. It's always good, right? But let's compare that. Let's back this out. I want to do it on different time frames. So let's go to a 5-day chart. And as you can see, I mean, we have just been completely, I don't know if you can tell up here, but it's a gap up. It's a stair step up, up, kind of up a little bit, and we ended up about the same, stair step up. Big run into the close here. That's about 20 points. And then again, just continuation Thursday and continuation Friday. So it's been very, very strong, and it's been, for a change, it's been actually much easier to make money in this type market, obviously. So let me back this out here a little bit more on a one-year basis, and we can see that we had been holding against this 2750 area and just could not break through it. Finally did. 2800 is well within the sights. I thought we might actually get that today if we would have been a little stronger, but we didn't. So I actually expect next week we probably get 2800 next week. So you may want to plan around that if you're trading the S&P on a weekly basis. Maybe some type butterfly around 2800 or something. But just as a as a concept. But again, we might do the same type pattern here as we get closer to 2800. Maybe we hit this and bounce off, and hit this and bounce off, bounce off before we finally can make it through. But I absolutely think we're going to higher levels here, and want to plan according to that. And don't forget, we've got earnings coming up, which will start in July. So we're right around the corner from earnings seasons, and that should give us lift as well. So let's compare this. This is the S&P. Let's look at the NASDAQ, because the NASDAQ has really kind of, I hate to say caught on fire, but it really has. The same thing. Here was the level, and we hit it, bounced off, kind of chop, 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 chop. Once we broke through it, we really took out, took off here to some really nice levels. And obviously that's bringing all the techs with with the NASDAQ. Of course, Google's had a nice run, Amazon, Apple, things are starting to look a lot better, and I think they will continue to look better again as we go into earnings. The last index, at least, is the Russell, and the Russell's just been on fire. The Russell's got a lot, Russell is small caps, but it's got a lot of energy in it. It's got a lot of financials. So we have just been moving and grooving in the Russell, and I like it. I like trading the Russell. The Russell does tend to have, when it pulls back, it does tend to have kind of sharper pullbacks. So I'm cautious of that. I love the Russell up here. I think 1700 is within easy reach, but also we could consolidate here fairly easily. And the reason I say that, let's go back to fib levels. If you look here, look at the S&P. Now this is a daily chart on the S&P, and we are once again kind of coming up into some pretty good resistance. We've got timing all over the place here, in the S&P for a possible pullback. Now that does not mean that I want to short it. Not even at all, really. If it pulls back, I think, especially if it pulls back any meaningful amount, we'll use that as a, as an entry point to get long. But just be aware, that can happen at any time. And the same thing, the correlations of the indexes overall. So that was the S&P. If we look at the NASDAQ, we are we're kind of doing the same thing. We're running up into some to some resistance for a potential pullback. This is a daily chart. We've got timing, and so caution is warranted here. And lastly, we've got the IWM. We have been it's a lot more apparent on the IWM that we're running into multiple levels of resistance up here. And also, if you notice the symmetry here on these moves, 21, 17, 16, 16, 17, 20, it makes sense that we might catch a breather before ultimately, going higher again. So, how do we play this? Well, again, I'm a cautious bull. I have dialed it up over the last week or two to kind of catch some of these moves higher, but now I'm starting to dial it back down a little bit. I've taken on some profit, and I'm kind of waiting, cash in hand on the sidelines, kind of waiting for some new entry points. And we have the G7 summit going on this weekend. We have Fed meeting next week. I'm looking at the financials for some upside probably next week, depending on what the Fed does. And I would love to throw out a couple of trade ideas, but I don't have any right now. I'm fairly light, fairly flat, and I'm just kind of waiting and watching. So next week, keep your eye on well, first over the weekend, keep your eye on what happens with the summit, and if anything out of the ordinary happens there. And also next week, don't forget we've got a Fed meeting. So be nimble, trade light, wait for better entries. I think we might have better entries coming up in the next week or so. And with that, be a cautious bull, and I hope this helps, and I will see you guys at the next update. Have a great weekend.